Hey, this is Stu with the Military Investor Network, and I was going to go over one of our deals that we currently got completed recently in Milwaukee, Wisconsin, and show you just the power of the BRRR strategy. BRRR is buy, rehab, rent, and refinance. And then some people like to add another R on there for repeat. Just to show, this will kind of go over the deal and show how great the BRRR strategy is. So this is the property here that our partner investor bought. We found it, and then we ended up selling it to another investor friend of ours. It's a little small 3-bed, 1-bath house in Milwaukee, Wisconsin. 3 beds, 1 bath, 845 square feet. So it's pretty small, but it'll make a great rental. It's a ranch, 1-story, and when we first bought it, the rental rates that we found were anywhere from $1,000 to $1,050 a month. You'll see in a minute what we ended up getting it rented for once our rehab was complete. But scroll down here, just look at the property package. We ended up selling the property to our friend for $78,500, and ignore the down payment and closing costs, all that information, because our friend actually bought it with cash, which is kind of the one thing that you'll need to be aware of when doing the BRRR strategy. Your buying side of it, you need to do it with cash, because you're buying a property that's pre-rehab, and you're not going to get normal bank financing on something like that. So you're either going to have to find partners, bring your own cash, or get some type of like private loan or hard money loan. But here's kind of a Google Earth viewpoint of it. It's a nice little neighborhood. This is the house right here in the middle, and here's the street that it's on. Here's the house right here in the corner. But nice big street, nice sidewalks, big trees, real nice little area. And we took some comparables of the area to get some idea of what the value is, and it came up to be around $85,000 for the average recommended price for after repair value on here. So you can see the summary of the sold listings, and our average here is about $85,000. So let's go to the analysis here, and we will see that the actual repair value is $85,000. Our friend ended up paying cash for it for $78,500, and once the rehab was complete, we actually just got it a lease with a tenant for $11.25. So it was above. We got it rented for above what the market value is in that area. So our investor is going to do a cash out refinance, and so we just took, most of them will require a 75% loan to value, and so we just took 25% down of this $78,500, which is what he paid for it, at 30-year loan at 6% interest. And so that's a down payment. So basically, what he's going to be required to put into the deal is $19,625. And then you tap on some closing costs. So all out of pocket there is $21,980. And then you add your other costs. This is your principal and interest payment, your taxes, your insurance, and then we always add in some maintenance and capital expenditure savings. So this is a pretty small house, so $500 for annual maintenance, and then $500 saved up per year for capital expenditures, because down the road eventually you're going to have to put in a new roof if you keep it long enough. Something big is going to break, so you want to save for those big expenses. We got property management in place for 9%. And then there will always be vacancies at some point, so we save 7% of the annual rent for vacancies. So this is all your cash out of pocket. And if you come down here, you'll see the calculation Our leverage ratio is 4-to-1 because we're putting 25% down. Our leverage rate is 6%, which is our loan term. And this deal is a 11.39% cap rate, which is incredible for a single family home. So that arbitrage spread is 5.39. So the ROI, the total return on investment, is 27.6%, which is huge. And then cash on cash return year one, that's to include closing costs. So at the end of the year, all your income that received minus expenses, and then divide that by how much money you put into the deal year one, which is your down payment and your closing costs. After you do a cash out refinance, is 21%. So this is an incredible deal for our investor friend. This is what the power of the BRRR strategy is. You basically get immediate equity because you're buying the house at a discount, and then you have much more higher of a rent to purchase ratio. As you see here, you bought it for $78.5 and we're renting at $11.25, so it's way over the 1% rule, and that is what creates such a great return for this property. So I hope you guys enjoyed that, and if there's any questions, reach out to us, and if you're interested in houses in Milwaukee, let us know. If you like this video, please like it and subscribe to our channel for more. Thanks.